Needs nursing home care and no planning was done. The costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all of this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age for Social Security, whereas 65 is the eligibility age for Medicare, and then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, they haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here as the country looks to dig out from a whole bunch of snow and decent amount of ice that came through as well. And I think that when we look at the economic impact of this, Mike, it's going to be one that takes a little bit of time to understand exactly what we're seeing. But I think to this point, the big things that I'm noticing just as I look at snowfall totals throughout the United States is some of the more southern areas were spared by the fact that this thing moved a little bit north, and so not quite as bad as it could have been for portions of the southeastern United States. But certainly when you look at basically, northern Arkansas through the Midwest and up into the New England region, you're talking about significant snowfall amounts. And in the Carolinas, North Carolina really, you did end up with some ice that caused some problems as well. But the fact that this, by and large, didn't get, the initial projections of the ice and snow that could have affected, Atlanta all the way through Charlotte and everything, things a little better on that front. But the estimates that I've seen are that because of just how broad this storm was and the cold that got down into Texas and places like that, the estimates are that this one storm alone could take anywhere from 0.5% to 1% off of GDP for the quarter as you look at the economic impacts here.
Yeah, last count, we have 300,000 customers without power in Tennessee, 900,000 across the country. We had 12,100 flights canceled Sunday. That is the most since March 30th of 2020, right in the middle of COVID, when 12,143 flights were canceled. So there is some economic impact. Obviously, travel's been snarled, and a lot of people are without power, and I'm guessing we won't see the full ice effect and what exactly was taken out in terms of infrastructure in some of those more southern parts of the country for a few days here.
So again, the country trying to dig out of here, but I think overall, the initial projections from the middle of last week, fortunately, the storm just continued to drift northward, and so you didn't end up with as much in the southern part of the country as you could have. And the big thing now is just digging out and getting travel back to normal. The good thing from my perspective looking at this is because it was so cold in many of the areas where the snow was falling, yes, you ended up with high accumulation amounts, but ultimately it's pretty light, fluffy snow that's easy to move. And so it's not something that I think is going to snarl things for the better part of the week, but you still probably have a couple days before you have things back to normal. And then, of course, you pop open the weather apps this morning, and you see, hey, there could be, at least in the New England region, another 6 to 10 inches coming in next weekend. And so you kind of say, okay, are we in one of these cycles where it's like every week, like 2015, you're getting dumped on, anywhere from half a foot to a foot of snow, and what kind of impacts does that cause?
And no melting, by the way,
Let's go,
Chuck.
baby.
Yeah, it's not getting above freezing in the New England region until at least next Tuesday, it looks like.
Flamethrower? No?
I think my neighbor might have one.
Okay.
One of my neighbors got an electric snowblower. I was surprised that existed. That's a new piece of technology as far as I'm concerned. And I had one pipe freeze that did not burst, so I feel like I'm coming out ahead on that one.
Hasn't burst yet.
No, it thawed this morning. We had the space heaters running in the basement for the last 48 hours. Our electricity bill is going to be through the roof, but the water started finally flowing through the bathroom faucet this morning after not doing so since Saturday morning at 9 a.m. So we're happy.
I had if you want to know what not to do in that situation, I had a neighbor
burned their house down.
Burn their house down trying to thaw a pipe with a
flamethrower.
A hairdryer?
Full circle.
They were trying to thaw a pipe with a hairdryer and accidentally lit the insulation in the house on fire.
Yeah.
God.
And,
sounds about right.
And that was just the whole thing. It was an old construction, and that was it. So
don't do that.
If you're looking for what not to do, don't do that.
Yeah.
Because it's worse than a frozen pipe when your house burns down, unfortunately. So hopefully we don't see too much of that.
Other economic impacts, we did see natural gas top $6. How do we price that? Is it
Per million BTUs.
Per million BTUs. That was the first time that's happened since 2022. So clearly those heating bills and specifically the wholesale prices for utility companies running all the electricity they need to have spiked during all of this, and the cold weather continuing through parts of the country may continue to see that elevated.
So this, again, I don't think there's anything too much more to say about this. It's one where I think, by and large, the precipitation amounts that came through were pretty close, at least if you were in, again, kind of the Midwest and the Northeast. The South was largely spared by this thing drifting a little bit further north, and so that makes it such that the economic impact's not necessarily as big as they could have been, but still some work to do in terms of getting everyone dug out and back to functioning at this point here. With what was just this massive storm system that stretched across, most of the country for the last couple days here. This then gets us to what we have to look forward to in the coming week. And I got to tell you, sneaky big week, actually, in terms of data and earnings. This morning we got durable goods orders, which came in a little bit better than anticipated. When you strip out transportation, vehicles and airplanes and things like that, basically right on the money for expectations. So it was just, you had some big orders for, I guess, airplanes and cars that skewed things to the upside. We've got Case-Shiller home price data and FHFA home price data coming out tomorrow at 9 a.m. Eastern. On Wednesday, we've got a Fed meeting. Sneaky Fed meeting, like no one's been talking about this really, probably just because expectations are that they're not going to do anything. But we do have a Fed meeting on Wednesday, and so that always gets a lot of eyeballs and a lot of interest. Thursday, we're going to have weekly jobless claims, and then Friday, we're finally going to be caught up on producer price index when the December PPI comes out. So that is exciting to have that puppy in the queue prior to the end of the month. Earnings, first real major week for earnings as well. Tomorrow we've got United Health, Raytheon, Texas Instruments, Boeing, Union Pacific, Northrop Grumman, UPS, General Motors, Kimberly-Clark. So you got some big names there. Wednesday, the real heavy hitters come out to play. Microsoft, Meta, Tesla, and then you still have, again, other big names in terms of AT&T, Progressive, ADP, General Dynamics, Starbucks, Waste Management. They're all reporting then as well. And then Thursday, you've got Apple, Visa, MasterCard, Caterpillar, Blackstone, Southern Copper, Honeywell, Lockheed Martin, Comcast, Altria, and a whole bunch of other names. So you're right into the middle of kind of the 2-week peak of earnings season now. And it's going to be interesting to see what we get in particular from these tech companies, in my opinion, where a lot of them have kind of plateaued in the last 4 to 6 months. And can this earnings season be a springboard for them to move higher? Or do we, continue this chop and just not really see them get anywhere? Microsoft, I think, is going to be a really interesting one to watch, in my opinion, Mike. The last 2 earnings reports from Microsoft, both were very good, and both saw the stock surge to around $5.50 a share afterwards. It hasn't touched those prices aside from those 2 earnings days. It slid in the weeks and months after. And so the question that I have is, look, do you see something similar in this one at this point? Because Microsoft has just been unable to really get its footing after earnings despite those earnings day pops.
Yeah, I was going to say, of the 4 big ones there that you mentioned, Tesla, Apple, Microsoft and Meta, to me, are the most interesting. They're the most plugged into the massive spending increase on the AI infrastructure move. Tesla and Apple have interesting things to say, but again, their core business is not investing in new AI development at this point. And those 2 really have a lot more to say about it. So if you are looking for hints as to how much longer this infrastructure play out can keep going, these gravy trains are the ones that are going to tell you.
Can we just talk a little bit more just about a couple of these? Meta, just as an example, just because you mentioned them. On January 27th of last year, so 1 year ago, they traded at $661 a share. They're at $667 right now. Basically flat for the last year. Microsoft, you take a look at where they were a year ago. January 28th, they were at $445 a share. They're at $469, so up 4 or 5%. But basically, again, the path has been anything but flat. but the stock has, barely budged in the last year. The one that you can look at and say, hey, things have changed positively is Google now, or Alphabet as they like to call themselves. They're at about $1.89 last year. They're at $3.31 right now.
Right.
Amazon, you take a look at them. They're at $2.38 today. January 27th, they were $2.35, so up 1% over the last year. Tesla was at $400 last year. They're at $440, but again, choppy move, and 10% is nothing to sneeze at. It's nothing crazy. NVIDIA has had, a significant move up, but has plateaued now in the last 6 months since late July. So a lot of eyeballs on these names because the excitement from last year kind of tapering off in these names. Do we see, maybe another leg up, or do we see these start to slip? Very interesting earnings season, in my opinion. Let's take a quick break. When we come back, let's do a little bit of Fed talk right after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mike, we talked briefly in the first segment that we do have a Fed meeting that I think has kind of snuck up on everyone this Wednesday. And we've also got this piece in Barron's here. It says Powell's term as Fed chief ends soon. His words carry more weight than ever. Do we agree with that premise of this piece?
I'm not sure about more weight than ever. But look, I think the reason this meeting itself has snuck up on people is because there's been far juicier Federal Reserve news than what they're going to do with interest rate setting policy. Was it 2 Sundays ago? No, yeah, 2 Sundays ago now that Jay Powell released his 2-minute video calling out, what do we want to call it? Meddling with the Federal Reserve from the White House and calling the investigation into the construction little more than intimidation techniques. And so, yeah, you're right. Nobody's really been focusing on that next meeting. I think when it comes to Wednesday's meeting, I don't think his words carry more weight than ever because I don't think he has any interest in using his official Federal Reserve chair podium to talk about the intimidation from the White House. I don't think he wants to do that. That's why he released a video via Twitter. Otherwise, he would have done so. And so I don't think that this Wednesday is the most important Fed meeting. I don't think his words on Wednesday carry more than ever. I do think that, it's going to be a distraction, though, at this meeting. Instead of asking questions about their views on the state of unemployment and inflation and where interest rates should be, where the natural rate might be, Jay Powell is likely to face a lot of questions from reporters about his video that he posted, about his view on the investigation into his role in those construction projects, and therefore it's going to be a pretty messy meeting would be my guess, or a messy press conference anyway. I don't think the meeting itself will be messy.
Yeah, I don't get the sense that he wants to speak off the cuff with regards to anything related to, his video. And so the thing is, as you mentioned, I think he's going to get a lot of questions about it. And I think this also is partly just because we're still trying just to figure out where the labor market is right now. We talked last week that there are some signs that maybe the labor market is starting to thaw in the weekly jobless claims numbers, but that's just one area. You have other areas where you look at and you're like, no, this still doesn't really look very good, but they're not as up to date and as high frequency in terms of when we get readings and how timely they are. Right. So I think we're trying to get a sense of where this labor market is, and the big thing is until you have a sense of whether or not there's a turn happening, it's kind of hard to want to do anything from a policy perspective, which is why, by and large, if you look at what's being priced in this year right now in terms of Fed action, there's not really much here. There's the potential for a rate cut being priced in the June meeting and potentially one more being priced in the December meeting. That's it. There's nothing being priced as far as any probability of hikes. The most likely outcome at the next 3 meetings through end of April is no change in rates. And the furthest that you get with, at least a 20% chance of rate cuts is maybe, to 3 rate cuts this year.
Yeah.
And I think, look, you can make a case that's reasonable, especially, here's the other piece that I think we need to pay some attention to. Something that we haven't really talked about a ton this year is the overall dollar index, where the dollar's fallen about 3% this year now. And in a world in which, hey, commodity prices are already screaming, this is going to affect the prices of imports and things along those lines. Does that potentially firm inflation up a little bit and become cause for concern right as the labor market's turning? That's a potential story that you want to watch. It's not there yet. I don't think you're there on that side yet, just because I'm not sure the labor market is turning. It may be, but we're just in the early innings on it. But this is another thing that you have to watch as far as how the Fed may react, even before you get to the fact that you're going to have a new chair in place 4 months from now.
Yeah. Again, I think the interesting things to watch about the Federal Reserve, surprisingly, are not what its actions or even statements are around inflation, labor market, and interest rates. We're going to have to wait a little bit before any of that becomes interesting. The more interesting stuff to be answered right now is how is Jay Powell thinking about the end of his term as chair? Is there any chance he's consider staying on? We still don't. Do we have an official pick from the White House in terms of his replacement? And will the Senate be willing to confirm anything? So there are some pretty interesting things going on within the Federal Reserve and the pressure campaign from the White House, but none of them are likely to influence what happens with interest rates prior to probably June of this year.
Let's take a quick break here. When we return, we'll do a little bit of Wall Street Watch, and then we'll talk a little bit more about, hey, what are the risks of having interest rates lower than the economy dictates they should be? We'll discuss that when we return.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets beginning the week in positive territory as Wall Street assesses the economic impact from Sunday's significant winter storm. Traders are also readying for a Fed meeting with the decision on interest rates Wednesday afternoon, in addition to big tech earnings from Microsoft, Meta, Tesla, and Apple. Right now, the Dow is up 0.4% or 193 points higher. S&P 500 up over 0.5% or 37 points higher. NASDAQ also up over 0.5% or 128 points. Russell 2000 is up about 0.25%. 10-year Treasury yield down 3 basis points today at 4.203%. And crude oil down about 0.5%, trading at $60.80 a barrel. Some breaking news from NVIDIA this morning. After the AI and chip giant announced it is investing an additional $2 billion into AI data center company CoreWeave. The company said that they would build new AI factories on NVIDIA's computing platform technology operated by CoreWeave. NVIDIA shares are down modestly, while CoreWeave stock is jumping nearly 13%. Meanwhile, shares in USA Rare Earth rallying 10% after the critical mineral startup announced that the Department of Commerce will take an equity stake as part of a funding deal. Elsewhere, shares in gold miner Newmont are climbing nearly 3% higher as gold prices have climbed above $5,000 for the first time. And tomorrow morning, we'll see more fourth quarter earnings from the likes of United Health, RTX, Boeing, UPS, Union Pacific, and Northrop Grumman, as well as General Motors. Again, all due out tomorrow morning. I'm Tucker Silva, and that is Wall Street Watch. And remember, the Financial Exchange streams live every day on our YouTube page. Subscribe to our page and follow market activity all morning long, only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
Mike, can we talk a little bit about gold just since Tucker mentioned it and we had an item in our stack?
We can.
I feel like it's worth...
I love gold!
Thank you, gold member.
I knew it was coming there. So, in any case, you do have gold over $5,000 an ounce. It is important to note that gold is not just priced in dollars. You can, get the price of gold in just about any major currency. And the big thing that we are seeing here is that this is happening across the board throughout major world currencies, whether you are looking at the dollar, the euro, the pound, the yen, the Swiss franc, the Chinese yuan. Like you go through your major world currencies, and what you find is that, not at the exact same rate, the price of gold is going up relative to them. And so there's this piece in the Wall Street Journal, the 5 reasons that gold prices surged above $5,000 an ounce. And, it's this idea of, here are the ones that they give you. The debasement trade, so the idea that the strength of the U.S. dollar may weaken. Lower interest rates, which, again, typically lower real rates relative to inflation, tend to spur runs in gold and other precious metals.
Think about it as opportunity cost, right? Gold doesn't pay you a dividend. If you're not getting paid a dividend or interest on your CD anyway, you might consider that a more reasonable trade-off compared to when you were getting 5% on a CD.
Central bank buying, expensive stocks, and momentum. So let's break this down in the context of what we are seeing in these areas, because I think a couple of these could be true, a couple of them are not, and I think there's some stuff that the Wall Street Journal left out of the list, in my opinion.
Good.
The debasement trade is the one that just about everyone is talking about. Like deficits keep going up, and so the hedge against deficits going up and your currency being worth less is to go and buy precious metals. I think there's a reasonable case that is part of what's going on here.
And by the way, not a U.S. only problem we're talking about here, right? We have China with massive deficits. We have Japan with deficits. We have pretty much every developed and developing nation running very large deficits and have been for the last 6 years. And, okay, I can connect those dots.
Correct. So, again, like overall, if you look at it, again, you go across any major currency and you're seeing the exact same thing here. So that's happening. Let's talk a little bit about the second item. Lower interest rates. So the idea here is not just lower interest rates nominally. It's not just the Fed cutting interest rates from 5% down to 3.75 or 5.25 down to 3.75. It's the idea that real interest rates net of inflation have gone from, again, call it around 2% to around 1%, and that's the piece that really matters, is what's happening with real interest rates. That's what typically gold and other metals are typically more sensitive to, as opposed to nominal interest rates.
I guess my question, though, is, are we seeing that effect globally? Because this is a global phenomenon we're seeing with gold, not just U.S. buyers forcing it upwards.
You are. I mean, like you look at Japan right now, inflation's moving up, and the Japanese central bank is not moving rates up at as rapid a rise as inflation is moving, and so you've got that happening there. Central bank buying. This one is one that I'm going to poo-poo, quite honestly.
Okay.
Chart from the Wall Street Journal that they pull from the World Gold Council. Basically, central banks around the world have been net buyers of gold since 2011. They have ramped up their pace in 22, 23, and 24. But the move that we're seeing is in 25 and 26, where we don't have full year data yet. And it's not like we saw gold go hog wild in the 22 to 24 period.
Right.
So I kind of poo-poo the central bank buying one, just because central banks have been net buyers of gold for 15 years now, and gold did not go wild during the 2010s. So I kind of poo-poo that one. Expensive stocks. I'll quote here. I won't quote. It's basically saying, hey, stocks have gotten expensive, so people are rotating into precious metals.
They've been expensive for
guys.
The last
I've never
3.5
seen
years.
that ever.
Right.
Like that's just not a phenomenon that you see. And by the way, European stocks are not expensive. So if this were the case, it wouldn't be happening in Europe. It wouldn't be happening in EM, emerging markets. But it's happening in those currencies too. So I'm not buying the expensive stocks piece. Momentum. I do kind of buy, but I want to add one piece to this, which is retail speculative mania.
Sure.
Because
it's
what
the
you
latest meme.
Yes, what you are absolutely seeing here, and this is confirmed if you look at the data in terms of like what's being talked about most on Reddit, stock forums right now, it's silver and gold. That it is. You could make a case that from a meme perspective, silver is currently occupying the space formerly occupied by Bitcoin. And so that is the issue. Not the issue, but I think one of the major things here is you've got very small markets. I mean, these are not, big markets that get like massive amounts of trading activity normally. And just to put this in perspective, if you wanted to look at the big, silver ETFs that are out there right now. For the last 30 days, the big one that's out there, which is the iShares Silver Trust, is seeing an average of 95 million shares a day traded. Okay? If you go back and look at the last 5 years, it typically averaged 10 to 20 million shares per day traded. So it's seeing anywhere from 5 to 10 times the normal amount of trading taking place in it. It's retail mania that is a huge driving force in this. I'm not saying that's good or bad. I don't really know. But that is a major, major piece of this. And it's the fact that these are normally pretty small, not illiquid markets, but just not ones that get a ton of participation. And now they're just seeing interest through the roof. And that is a huge driver of what we're seeing in precious metals markets. Gold, silver, platinum, you can go down the list, even ones that, silver's got industrial uses, palladium's another one, but this is absolutely a key driver as well here. And the other thing that I think is being left off, in some of these areas, you do have concerns for geopolitical reasons about whether production levels might change in the next 6 to 12 months.
Sure.
And I think that's something that's afoot as well, and something that's not just happening in metals markets, it's happening across lots of different commodity markets, and is a key theme that's out there as well.
By the way, attributing some portion of the price movement to these different effects is, of course, impossible.
Right, I don't know how much.
The one thing that's interesting to me, though, the only one that I look at on this list as a possible rapid change to, you look at the debasement story, or you look at the lower interest rate story, or central bank buying, all of those are unlikely to change on a dime. The only one I can look at to say, oh, that can change pretty quickly is the momentum story, where, retail investors are fickle and their attention can be drawn elsewhere very quickly. So all the other effects don't seem like they would change overnight.
Let's take a quick break. When we return, let's talk about potential new tariffs on Canada and whether we should spend more than 3 minutes talking about them.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, It's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
All right, Mike. So, piece in the Wall Street Journal, I think this was late Friday. No, this was Saturday. President Trump threatening Canada with 100% tariffs on all Canadian goods and products coming into the U.S. if Canada makes a deal with China. Should we care about this, or is this nothing?
Look, same story as the Greenland situation.
Yes.
And far less impactful. So,
from what perspective?
We were threatening tariffs on all of the European Union, which is a far larger dollar trade partner than Canada.
Is it that much bigger? I can't even remember at this point.
I believe so. I'll pull some stats up during the break, but I believe that the European Union is a bigger trading partner between goods and services than anybody out there, including China. So I think that they probably eclipse
it is. Yeah, you're right.
It's quite a bit.
We import about $200 billion more from the EU than from Canada. Canada still is if you're talking in terms of single countries, it is the third largest import partner, but fourth if you include the EU as a whole.
So, not saying this isn't impactful, but we've seen this stuff, how it typically plays out, and how it typically plays out is big headline-making threats, followed by some form of negotiation.
So we'll watch. We'll see if anything develops. But again, even if you look just as recently as last week, the conventional wisdom on this now is, okay, this is the initial position, and it's unlikely that this actually ends up being implemented. And the market reaction today, I think, is telling you that story as well.
This message is for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. Well, that's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is there may still be meaningful legal options available even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Piece of the New York Times. Low interest rates sound great, but a Trump Fed could cause a painful sugar high. Discuss, Michael.
Well, okay, a Trump Fed. The argument that's being made by the New York Times is that the president, through his appointment or future appointments, will have the ability to influence the Fed to bring interest rates lower. So
lower than they otherwise would have been brought by the Fed at
by
other
an independent
points.
Fed. So that is the argument that's being laid out. We've talked about the independence of the Fed, how important it is, and whether or not we find it likely that over the course of the next 3 years that influence is exerted successfully. But the very obvious answer for you is that you risk much higher inflation. We don't need to go back too far to see this, right? The Fed, for all the talk that we have given the Fed over the course of the last few years, we were pretty clear back in 2022 what they were doing seemed wrong for the moment in time. Lo and behold, it was. They kept interest rates far lower than they should have been for far too long, and were a major contributing factor to the awful inflation that we all experienced in 2022.
Counterpoint. 2010s. Fed cuts interest rates basically to zero and then goes through a whole bunch of quantitative easing. Everyone and their grandmother is out there saying, this is going to cause inflation. It's going to... And it didn't during that decade. And I think that this also then speaks to the idea of two things. The first is we still have an imperfect understanding of exactly how inflation manifests and sustains itself. But the other piece that I think goes with this is even with that imperfect understanding, it still is important to consider the overall context of what's going on in the broader economy, because the key differences between the 2010s and 2020s and why we saw inflation versus not, number one, the 2020s, you had significant supply disruptions because of the pandemic.
Yep.
Number two, you had absolutely massive, to the point of like an order of magnitude greater infusions of cash into the U.S. economy than in the early 2010 period. The big thing in the early 2010s was, you remember the American Recovery and Reinvestment Act, the big infrastructure bill?
I do.
It was like $600 billion and change. We had like almost $6 trillion of stimulus that got pumped into the U.S. economy in a couple-year period. And this is before you even get to what was going on worldwide. So just fundamentally different environments that I think ultimately do lower interest rates, potentially raise the risk of inflation returning? Yes, but the context of what's going on in the economy also matters in that, hey, if you have a really tight economy with unemployment, still not, unemployment coming back down later this year and, demand for labor picking up and you're cutting interest rates into that, it's probably a risky move. But it's also not something that inherently guarantees that you get this massive jump in inflation, because we just don't know the context of, is supply increasing alongside of that demand and keeping things in balance? What is the actual source of that demand and where is it coming from? Like, these are things that are going to matter as well. So I do think we've, again, talked about the risks of a non-independent Fed for, any executive branch to be controlling. In this case, it's going to depend on, hey, where's the labor market moving, and what are we seeing on that front that could potentially, cause some issues with inflation if the Fed were to embark on a policy that is more dovish than it otherwise normally would be. Let's take a quick break here. When we come back, we've got hour 2 coming up in just a little bit.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. usvi.com. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit, and you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's two of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the elder law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here as we kick off a busy week of economic data, policy actions, earnings. We got all that this week. Anything from housing price data to a Fed meeting. We've got Meta earnings. We've got Apple earnings. We've got Microsoft earnings. We got all kinds of stuff going on this week. And so if you're, digging out of, a foot and a half of snow, if you are trying to, de-ice 2 inches of ice, or if you just got a little rain or maybe even just some clouds and you're just listening to us, we appreciate you joining us as always. Markets today seem to be pretty optimistic about the start of this week here, with the S&P up 35 points, about 0.5%. The Dow is up 134 points, about 0.25%, and the NASDAQ Composite up 139 points, just about 0.6%. 10-year U.S. Treasury is falling 2.8 basis points to 4.211%. So you've got Treasury rates moving in just a little bit here. Dollar index continuing to weaken pretty significantly, down 0.72% today to 96.70. So the dollar is weakened to the tune of about 2.5-3% over the last week. Big reason behind this is some strength that we're seeing in the Japanese yen, and we'll talk about that shortly. Gold, feeling that dollar weakness, up $111.20 an ounce, above $5,000 an ounce for the first time to $5,089.80. Silver continuing to just, go absolutely parabolic to the upside, up another 10% today to $112 an ounce. And we've got crude oil down 46 cents a barrel to $60.61. AAA national average for gas prices, though, moving up 1.7 cents as we continue to see some refinery outages due to cold temps. And so not a huge move, maybe 8-10 cents higher over the last week and a half. But you're towards the high end of the range that we've been in recently. And barring anything unexpected, I wouldn't expect this to have too much more in the way of legs to the upside on oil prices. As I noted, though, Mike, our top story for this hour is what's been going on with the Japanese yen. There's a piece in Market Watch. Michael Burry, who, again, the guy, look, two things can be true. The guy has had a better investment career than I ever will have. But also gets talked about as if he's this, predictor of everything that's going to happen in markets, when really he had one amazing bet about 20 years ago, and the rest of his career has been, just fine, but it's not like he's right all the time. Like most investment managers, it's kind of a 50-50 proposition generally.
Yeah, and I find myself falling into a dangerous trap where now when I'm seeing Michael Burry articles, I deal with them with a heavy dose of skepticism when,
yes,
in reality, he still brings up reasonable points, but he has been, I guess, inflammatory to such a high degree over the course of the last two decades without getting a whole lot of big calls right, that when I see his name printed in articles, I'm very frequently saying, okay, let's just put this one aside here. But talk to me about the Japanese yen and the reversal and so-called rate check that could be stirring problems for U.S. stocks if you buy it.
All right, so here's the deal. Japan has its own currency. It's called the yen. It's what they use to buy stuff there.
Yes.
You can, through different ways, trade yen for dollars and vice versa. As of about a week and a half ago, if you took a look at where things were trading as far as number of yen to the dollar, you got up to around 160. Which was estimated at that point, not estimated, but kind of predicted by a lot of Forex experts, that the Japanese Ministry of Finance, basically the equivalent to the U.S. Treasury Department, might want to put in place some kind of intervention to prevent the yen from weakening too far. They do this, I don't want to say frequently, but it happens on a fairly regular basis when things get out of whack in terms of exchange rates, to the point where it's kind of predictable what ends up happening then. And so we didn't see anything, really going on for much of last week. And then on Friday, word started leaking out that the Treasury Department had reached out to different banks, asking them to do exchange rate checks, basically saying, hey, what are you getting right now for, rates if you wanted to do a move of, because basically think about it this way, if you're trying to strengthen the yen, you need to weaken the dollar, you want to sell dollars and buy yen effectively, that's what you do. And so pretty much what you end up with is the Treasury saying, okay, give us rate checks in case, any action is warranted. And typically, this is an early sign that the Japanese Ministry of Finance is wanting to conduct some kind of operation. Potentially with the help of the Treasury, but usually not. It's usually just, the Ministry of Finance will come in and they'll do all the stuff they need to. The interesting thing, so this occurs on a Friday, and typically within 24 trading hours is when you see the action. There has been no action from the Ministry of Finance to this point, and yet the yen has strengthened relative to the dollar by about 4% now, which is typically about how much the Ministry of Finance tries to move it during these interventions that they stage. So first the question now is will there still be something beyond the move we've already seen? Don't know. But the reason why this matters to U.S. investors is not because the average person living in Boston, Topeka, Miami, Flagstaff, Tacoma, the average person in America does not need yen on a regular basis.
That's fair, yeah.
I've never held 1 yen, let alone 160 of them.
Right.
The reason this matters is that Japanese investors are huge investors in U.S. markets. And one of the risks that they undertake in doing so is if their currency strengthens relative to the dollar, the value of their investment in yen terms goes down. If you buy a U.S. bond with, let's just use it, this isn't how it actually works, but let's say you use 160 yen to buy a U.S. bond. And now you go to sell that bond, but you only have 155 yen coming back. You're like, well, I'm weaker in the terms that I can use to buy cars, housing, and food where I actually buy them. So that's the risk that is posed here. And this is why historically, not even historically, over the last 5 to 10 years, one of the risks for U.S. markets has been a strengthening of the yen in the short term because it tends to result in capital going back to Japan, again, short term for trading purposes, because investors don't want to take the risk of, losing more. So this is kind of the risk that is present. It's what caused markets to get a little edgy last, late July, early August when we saw some really weird things happening there. But I always make the point, look, you rarely see the same issue cause, a blow up in markets twice in very short proximity. And I think that's kind of the case here where, look, investors already had to clean up their books for yen exposure and things like that a year and a half now. They're kind of watching that still. It's not something that's going to, catch them off guard because they've seen that happen already. It's just, typically it's something new that needs to surprise markets, and we haven't gotten there yet. But that's what's being pointed out here effectively.
Fair enough.
Now that we've talked about foreign exchange to the point where all of you are like, great, Chuck, can we do something else? The answer is yes. We're going to take a break, and then we're going to talk about whether the middle-class lifestyle is out of reach, and we've also got trivia. That'll suck you right back in after 10 minutes of Forex talk right after this.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, It's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Social Security and Medicare are oftentimes lumped together but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And in case you missed it for some reason, last night the Patriots and Seahawks won their respective conference championship games to advance to Super Bowl 60. These two teams previously met with the Patriots coming out victorious. So our trivia question today, what number Super Bowl did the Patriots and Seahawks meet in last time? Once again, what number Super Bowl did the Patriots and Seahawks meet in last time? Be the third person today to text us at 617-369-3600. 362-1385 along with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we had a piece in the New York Times featuring a new New York Times Siena poll that was taken about 2 weeks ago. And the title is Voters See Middle-Class Lifestyle as Drifting Out of Reach, Poll Finds. And basically they polled people on, a whole bunch of different things and said, do you find this to be unaffordable, no opinion, somewhat affordable, or mostly affordable? And here are the areas that were found to be most heavily unaffordable. Education, with 58% of people responding that way. Housing, with 54% of people responding that way. Healthcare, 47% of people. Having a family, 44% of people. Groceries, 28%. Food, 26%. Utilities, 23%. And transportation, 22%. The other thing that was interesting is they broke this down from a demographic standpoint and looked at, amongst different age groups, what are the differences there? Specifically, do you think that the life you feel like you should be able to afford is out of reach, within reach, or currently can afford it? And basically what they found was that younger people were far more likely to say that the lifestyle they wanted was out of reach.
And specifically, millennials are the, whiniest cohort of the group.
Yes, with Gen Alpha, is it? Is that what we're calling them?
Z?
Gen Z, whatever they are.
18 to 29-year-olds, I think it's
Gen Z. Gen Alpha's the next one after that. Yeah, Gen Z is, in a pretty similar place. And Boomers, 63% saying, nope, we can afford exactly what we want. So let's talk first about these micro issues. What stood out to you when looking at them, Mike?
Nothing did I find immensely surprising, right? I think transportation and utilities and food prices, as much as we make a stink about them, I don't think people are legitimately having a tremendously difficult time putting food on the table. They're just dissatisfied with where prices have gone.
There are signs that some families are, not in a good
Again,
spot.
I'm speaking in the aggregate here. I'm with you. Yeah, the pace at which people have been visiting food banks, and I don't mean to diminish those things. I just mean that when we compare to, say, the portion of people that find education and housing to be unaffordable, it's a much smaller portion of people that were polled here. The healthcare one is interesting to me. I would imagine that flipped dramatically over the course of the last just few months with the expiration of the Obamacare Affordable Care Act tax credits. The other piece just to point out here, just because when we say that, 58% of people find education unaffordable, that does not mean that 42% find it to be affordable. It means that, 8% said it's mostly affordable, 26% said it's somewhat affordable. So I think by and large, the big categories where people are saying, hey, this stuff is expensive, are the ones that you would think of: education, housing, healthcare, having a family. It's the same ones that we talk about over and over on this program. What I don't have here is any comparison to 5 years ago. And frankly, I think that would be pretty interesting to me. Is we've been talking about affordability really heavily now since 2022. Do you think that's fair to say?
In this context, yes. But I think that as the lack of data points, longitudinally, what were respondents saying in 2017 or 2010,
right,
is something that we miss on this. Because how many times, Mike, back in 2014 or 15, did you hear, no one can buy homes because interest rates are too low and it's pushing up home prices and it's punishing savers also.
Right.
So I feel like we just always complain about this stuff, and it's not to say that there isn't a problem, but what struck me on this, Mike, was those top three areas that people say are the least affordable, that the people have the most affordability problems with. Aren't those the three areas where we have the highest level of intervention in those markets?
let's see, compared to the others.
Like transportation.
Yeah.
Do we sit here and we're like, hey, you know, the first of all, there is no federal transportation system, but like, do we sit here and are sitting there going, hey, like the federal government is, you know, intervening in transportation too much,
or in car prices? No, Like we really don't have much in the way of. It's an interesting conclusion there, Chuck, or an interesting observation that, you know, compared with groceries and food prices and utilities, there's a fair bit more in the way of intervention on education, housing, and healthcare.
Well, here's what we do on education. We throw a ton of money at it. We say, hey, you can't afford to go to college? Here's some student loans, you know, subsidized by the government. You can never discharge them. But do we require any type of expanded offering from colleges in order to do this? No, we just say, okay, here's the extra money. Supply remains the same because colleges know that if you're trying to move up in your ranking, you want more applicants and fewer acceptances. And so we've created this bastardization where some of it's like a public market, some of it's private, and none of it works well together. Healthcare is basically the same thing. Hey, here's a bunch of money to go and pay for health insurance. Do we require that there are, you know, more doctors trained each year in order to accept the larger number of patients? No, we don't. And so, again, you kind of got this thing where it's like, hey, here's a bunch of money, but supply's not moving up. Housing. Oh, I'm glad we got here. Housing. I want to introduce you to a little thing called the mortgage interest deduction, which is basically hundreds of billions of dollars a year going to housing. Do we do anything to improve supply, or do we just throw a bunch of money at the problem?
Money at the problem.
Money at the problem. And so I can't help but think that whenever we see affordability being mentioned as the problem, the two things that we decide to do are, hey, here's some money, that'll solve it, or we're going to cap the price of it, that'll solve it. And does it ever actually solve it?
Yeah, I think we all need to think a little bit critically when we get faced with these proposals like the 50-year mortgage, like new tax deductions for education, or, you know, forgiving student loans.
Austin, Texas home prices right now are down almost 20% from the peak. And the reason why is because they decided, hey, there's a lot of interest here. We're going to build a ton of homes. And guess what? It's Austin, Texas, so the regulations allow for the building of a ton of homes. And so home prices are coming down rapidly now. Are the people who, you know, are trying to sell that bought in 2022 thrilled with this? No, but you have lower home prices now because you built way more. It's not too complicated. It's supply and demand. And we refuse to learn these lessons and instead say, oh, I want to, you know, cap, here's, you know, $20,000 for first-time home buyers. Oh, yeah, just give everyone more money with the same number of homes. That'll make it more affordable.
Let's cap how much you can charge in credit card interest rates.
That's going to solve the problem. So we need to work on the supply side of the piece in order to get somewhere, and all we ever want to do is add more demand, which is the exact wrong thing to do. Quick break, trivia answer, and Wall Street Watcher next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, It's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in positive territory as Wall Street assesses the economic impact from Sunday's snowstorm. Traders are also waiting for a Fed meeting with a decision on interest rates Wednesday afternoon, in addition to big tech earnings this week from the likes of Microsoft, Meta, Tesla, and Apple. Right now, the Dow is up 0.33%, S&P 500 up over 0.5% to 38 points higher, NASDAQ up 0.2% or 156 points higher. Russell 2000 is down now about 0.4%. 10-year Treasury down 2 basis points at 4.217%, and crude oil down 1% today, trading at $60.46 a barrel. NVIDIA this morning announced that they are investing an additional $2 billion into AI data center company CoreWeave. The company said this morning that they would build new AI factories on NVIDIA's computing platform technology operated by CoreWeave. NVIDIA shares are down modestly while CoreWeave stock is jumping 9% higher. Meanwhile, Microsoft shares are climbing nearly 1.5% after the tech giant unveiled the next generation of its AI chip in a push to provide an alternative to NVIDIA. Elsewhere, shares in USA Rare Earth rallying 11% after the critical minerals startup announced that the Department of Commerce will take an equity stake as part of a funding deal. And tomorrow morning, ahead of the opening bell, we'll see more earnings from United Health, RTX, Boeing, UPS, Union Pacific, Northrop Grumman, and General Motors. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. What number Super Bowl did the Patriots and Seahawks meet in previously? That would be Super Bowl 49. Pat from Wilmington, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Pat. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece in Barron's today. Longing to stop working, retiring early can create its own stresses. Mike, what do those stresses happen to be?
Well, one guy retired at 34, so I can imagine how that would be stressful.
That is early.
I think that's a little bit out of the normal observation. So I'm going to start off with maybe somebody retiring in their mid to late 50s. Would you consider that to be still abnormal, but a little bit closer to average, Chuck?
Yes, I mean, if you're retiring at 34, that's before even your statistically average midpoint life expectancy.
Yes.
So, man, that's early.
It is. Somebody pointed, or maybe this article pointed out that the idea of retirement in the first place is a relatively new idea, right? I mean, in the 1890s, I don't know what the average retirement was at that point, but you didn't spend 3 decades in retirement. The idea of a 3-decade retirement is very, very new, and I think we're all still sort of adjusting to it. But the idea of retiring early can come with stresses, and we tend to focus on the financial ones, but I'll be the first to tell you, there are a lot of other stresses about retirement that people don't fully appreciate, and the biggest one, I think, is what do I do with myself when 3 to 4 decades of my life have been dedicated to this body of work that I have put together.
And even I want to talk about that just in one other context as well, which is I have a buddy of mine who's in his 40s and has done well for himself to the point where he was able to earlier this year, not retire for good, but he was like, I want to take, a year or so just to be able to, do some stuff. And I was talking to him a couple months ago after, maybe 6 months or so of this. And even he was like, yeah, I played golf 3 or 4 days a week over the summer. And by the end, I was kind of like, okay, I'm not sure I want to keep just going to the golf course. He's like, I need something more in my life than just that. And so this was someone who was, even in his 40s and only planning on taking a year or so off and couldn't even get through that without being like, yeah, there's something missing here.
Well, I was going to say, if you retire in your 40s, who precisely do you plan on hanging out with?
Not me.
What's your social life going to be like?
Well, to be fair, he kept texting me to play golf. He's like, hey, man, you free? I'm like, no, I got to work.
Beyond the just lifestyle stresses, which I think a lot of people who have retired early have faced. Who am I going to socialize with? Is my spouse done working? Are they able to be done working? What am I going to do to fill my time? And plenty of people have that solved by the time they get to retirement. Don't get me wrong, but it is something you actually have to actively think about and plan out. It is, in most people's cases, not enough to just say, well, I've had a really stressful career and I'm retiring and I'm happy to just sit back and relax. That usually does not, in my experience, make people terribly happy for a long period of time. Beyond that, the financial stresses that you need to think about for retiring early. One, do I have enough money? And specifically, do I have enough money assuming that the market does not just produce predictable flat returns every year? Far too often, people look at the market and just say, oh, well, it averaged 10% for the last 100 years, so that's what I should planned for, and if it does so, I'm fine. That's not actually what has happened over the last 10 years. What you have to factor in is something called sequence of returns risk, and to make a long story short, if that sequence of return that averages 10% gives you negative 20% for the first 2 years of your retirement, then good luck. 2, how am I going to handle the likely income and expense gap that I get hit with for those first few years of retirement? So most people know not eligible for Medicare until 65, not eligible for Social Security until 62. If I am retiring early, before 65, I at least need to figure out the health insurance gap, and I might need to figure out the income gap as well. So how am I going to do that? And specifically, which buckets of money are going to be there to support me during this high expense, low income period of time? Is there anything else on your list that's kind of a stressor of retiring early that needs some planning?
No, I think we've gone through kind of the big high-impact ones.
There are a lot of complexities here. Obviously, your retirement accounts have very specific and strict rules around when you're even allowed to use them in the first place, and then a whole bunch of exceptions you can take advantage of if you really do some planning. But planning is the key word here. If you are thinking about retiring early, I urge you to spend time with a professional planning out how that is going to work and the risks to it not working. The number for the Armstrong Advisory Group is 800-393-4001. You can check us out at armstrongadvisory.com. Schedule time for us to call you back if you're out snowblowing the driveway right now. But the number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. How Americans are using AI at work, according to a new Gallup poll. First, let's talk a little bit just about how often workers are using AI. 46% as of Q4 said they are now using AI a few times a year or more.
Not relevant.
I don't think that really counts as using AI at work. I'm sorry. A few times a week or more clocks in at 26%. That is up from 19% in Q2 and 11% in 2023 Q2. So about a quarter of Americans saying, yeah, I'm using it at least a few times a week at work. 12% saying they're using it daily. That's up from 4% 2.5 years ago. Where I get to just in terms of the frequency, and this is, again, shown out in another stat, which is it's tech workers by and large that are using this stuff most heavily. And this is why whenever I read these pieces on, some Substack somewhere, some, Twitter feed or this and that about like, oh, like you don't understand what just happened with this new release of this product. Guys, most Americans are not coders. I'm just sorry. Like the guy who makes his living painting is not going to have his job impacted by AI the same way that you are. The guy that makes his living bagging groceries is not going to have his job impacted by AI the same way that you are. And the hubris of like, oh, this changed everything, and like no one's like, no, like I'm sorry, but the tech people that are just convinced that like this is going to apply to everything are really kind of bothering me in the last month or two, quite honestly.
Well, that's a perfect segue into this next piece about why people still matter in the AI era. And I don't know who at the Financial Times thought this was the right time to write this piece, but quite honestly, the reason that people still matter in the AI era is because AI has yet to do all that much stuff that's genuinely impressive at removing human beings from the process. Like you said, a lot of really impressive stuff in coding, and I don't mean to minimize any of that. But when I look around at the stuff that AI is pretty good at, it's about editing an email for me. What part of that process removes the human being from it?
The other thing, and this is just an interesting thing that I picked up kind of in looking at this. When we talk about what AI can do and like the things that like the average person like uses it for, it's like make me a picture of a penguin bobsledding or edit this email for me or do this, like do something creative. What I find kind of wild is haven't we spent the last 20 years telling people hey, you need to work more in like hard sciences like math, engineering, physics, like you got to get into STEM because that's what the future is. And now the stuff that we're using AI tools for the most is the humanities. And it's not really doing them particularly well either. Like, again, it's not something where you look at it and have you ever like seen a great AI work of art?
I'm not sure I'd be the best judge of a human-made work of art, so...
In any case, it's, you know, we've spent all this time being like, no, you got to get into like STEM, do this and do that, that's the future. And now we're trying to make AI do the humanities, and it's just not great at it, which I find kind of interesting.
Yeah.
But just like something that I picked up there. Let's take a quick break. When we come back, we've got Stack Roulette after this.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. From the elder law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. One of the biggest mistakes you can make as you prepare for retirement is missing important deadlines for Social Security and Medicare. You can apply for Social Security up to 4 months before you want benefits to begin. Medicare has a 7-month enrollment window around your 65th birthday. Missing that window may cause coverage delays. Something else to consider is that you don't have to start them at the same time. You can enroll in Medicare at 65, but delay Social Security to increase your monthly benefit. Learn more in our new guide called How to Apply for Social Security and Medicare. To get your free copy, call us today at 800-393-4001. That's 800-393-4001, or request the guide online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3. That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
The more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets, which makes me very sad right now thinking about that. The weather is perfect all year round, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now. Visit usvi.com. That's visit usvi.com.
Mike, what do you got for Stack Roulette?
A piece from, is this CNBC? Yes, CNBC. The U.S. states where you can retire at 65 with less than $1 million in savings. Guess
Anywhere.
what? Guess what? This article tells you nothing about yourself, your own spending patterns. The only thing it does is list out the cheapest states in the country to live in by cost of living. So if you find that to be useful, then you don't need to read this article. You can just Google, show me the cheapest states in the country to live in, because it is the same thing, and it goes through this not thoughtful exercise about, well, if you have this much money and you pull out 4% a year, then this is how much you need to live in each of these states. Again, not terribly helpful. And also, by the way, not an exercise that 99% of Americans are going to take part in. So nobody goes and chooses, hey, I'm going to move to Arkansas specifically because I can do so, according to CNBC, on $810,538.
And furthermore, like, I know people who live in Massachusetts that are retired with way smaller portfolios than $1 million. I know people that live in low cost of living areas, not Arkansas, but like I know people that live in I know one person who lives in Mississippi, which is about as low cost as you can get. They've got boatloads of money. They can't retire because they spend boatloads of money. So, like, yeah, this is
personal finance is personal.
Yes, this is a poor exercise that doesn't get at any of that nuance and instead tries to convince you, oh, if only I move there, I'll be able to retire. That's not usually how it ends up working. Let's see. I want to talk about this piece from Barron's. Meme stocks turned 5, which this is the 5-year anniversary of GameStop going all memey. Will there ever be another GameStop? The answer is yes. There's always, another place that gets nutty. Right now it happens to be silver. You could go and look back last year at some things that happened with like speculative nuclear power stocks and things like that. There's always stuff that captures, the memeing public attention these days. And I think that, yes, GameStop was kind of the first to break down those doors in a very specific way. But ultimately, there is you can make a case like an even bigger community that is now focused on this type of stuff now than there was at that point. Will you ever have something that unfolds in the exact same way?
Of course not.
Well, no.
You're not going to have some 28-year-old guy going by Roaring Kitty posting anonymous videos about it either, but that's kind of the nature of the universe.
Correct. But, there still are meme stocks and meme securities, and this is absolutely part of the investing landscape right now. And to anyone who's like, kind of stodgy and saying, oh, like, this will never work. Guys, like, this is part of the investing landscape now. They're not going away. It's you can't just be like, you're doing it wrong. There is no wrong as long as they're making money in markets, which they seem to be with their recent silver thing.
Yeah. Seems to be fair.
Again, who knows at what point you actually buy and sell, but again, a lot of the available data on 2025 trading by retail investors is that retail kind of smoked institutional last year. So If institutional investors are listening and they're like, oh, they can't do what I do. No, but they're not trying to either.
True.
They're trying to do something entirely different. They're playing a different game in the same sandbox. That's fine. It's a big sandbox.
The NFL's fiercest rivalry is sports betting versus prediction markets, to which I say, well, that is a very boring rivalry that most people don't really draw a distinction between. But obviously sports gambling has picked up substantially, and I am on the outside looking into this one. I do not gamble on sports. I don't really gamble at all. But I have been wondering aloud if this is more of a fad that's burning right now and eventually tapers off, like you saw with meme stock craze and some of the things that we saw back in 2021, or if this is different and more akin to an addiction that unregulated will continue to grow.
I
don't have
the
really
latter opinion.
Yeah, I know you. I know you tend to be, and I am
It's definitely not
terrified
a fad.
that that's the case.
It's definitely not a fad. Like, this has been around for decades.
Yeah, I mean, sports gambling in general has been around for decades, but it does seem particularly poignant right now and particularly obsessive right now.
Sure.
And I can't imagine it continues to grow at a fast pace, mainly because people are losing boatloads of money on it.
Yeah, the pace of growth is slowing just because I think there's only so big of a market you can tap. But I think there still is room for innovation, I think is how they'll phrase it. Let's take a quick break for the next 24 hours. Hope everyone continues to dig out of the storm. We'll see you tomorrow on the Financial Exchange.